Welcome to the deep dive. Today, we're really cutting straight to the heart of what's happening in residential real estate, like right now. We're focusing on the very latest signals, looking at roughly the last month, basically March 2025.
Right, and to, get a good handle on these shifts, we've been digging into a pretty detailed research report.
Okay.
Think of it like our briefing doc. It pulls together the latest numbers and analysis from, well, all the big names you'd expect. Realtor.com, Redfin, Zillow, Altos Research.
Got it. So our mission here is pretty focused. You've probably heard the buzz about the market cooling down compared to last year.
Sure.
What we need to figure out is whether that cool down is actually picking up speed. Is it accelerating? That's what we want to dissect with the freshest info.
Exactly, because you, our listener, you're looking for that clear, sharp understanding, right?
Yeah.
Something beyond the usual sales figures, which always lag a bit.
Right, they tell you what happened, not what's happening now.
Precisely. We're trying to filter the noise and give you the most current snapshot, the direction the market's heading.
So how are we going to do that? We're zeroing in on three key things. Think of them as like early warnings.
Leading indicators, yeah.
First up, active listing inventory, just how many homes are actually for sale. Second, median days on market, DOM. How long are homes sticking around before selling?
Okay.
And third, price reductions. Are sellers starting to slash their asking prices?
And these are so important because they give us that peek into the future, before it shows up in the closed sales data.
Right.
Like a big jump in inventory. That could mean less competition ahead for buyers.
Yeah.
Homes sitting longer might point to demand softening up a bit and price cuts. Well, that's a pretty clear signal sellers are adjusting to buyer moves.
Makes sense. And to really get a feel for the ground truth, we're also going to touch on recent closed sale prices, say, over the last couple of months.
Yeah, exactly. In specific areas. See if those downward pressures are actually hitting the final sale numbers yet.
Okay.
So we'll start big picture, national trends, then zoom right in on regions and even some specific cities, MSAs, to see what's really going on locally.
Perfect. Okay, let's unpack this. Starting nationally with indicator number 1, active listing inventory. What's the big picture there?
Well, nationally, the trend is pretty clear. We're seeing this continued, pretty significant year-over-year jump in homes for sale.
Okay.
Realtor.com's numbers, fresh from early April 2025, show a big one, up 28.5% compared to last April.
Wow, 28.5%.
And get this, that makes it 17 months in a row.
17?
Yeah, 17 straight months where inventory is higher than the same month the year before. That's definitely a sustained shift.
Okay, 17 months is definitely not just a blip. What about the other big data guys? Are they seeing the same thing?
Pretty much echoes it, yeah. NAR back in February, they had inventory up 17% year over year. And Altos Research, in their early April data, they were seeing an even bigger jump, 34.7% year over year increase in active listings.
So across the board, way more homes on the market nationally than a year ago.
No doubt about it.
Okay, but here's the million-dollar question for me. Is this increase just sort of steadily ticking up, or is it actually speeding up? Is the rate changing?
That's the crucial thing, isn't it? Looking for that acceleration. So while the year-over-year growth is huge, the month-to-month increases seem fairly steady nationally. Like the inventory is building, but maybe not at a crazy faster pace month to month.
Okay.
However, and this is interesting, Realtor.com's data does show the rate of that year-over-year growth ticked up slightly. In February, the OI increase was 27.5%. March, it edged up to 28.5%. So the gap between this year and last year got a little wider in March.
So wait, it's not just more homes than last year, but the difference between this year and last year is growing faster. Can you simplify that?
Yeah, think of it like two runners. You've got this year's inventory running ahead of last year's inventory on a track.
Okay.
What we saw in March is that the lead runner didn't just keep the same lead. They actually pulled a little further ahead. Their speed relative to the other runner increased slightly.
Got it. Pulling away faster. Okay, that makes sense. Anything else on inventory?
Yeah, one more thing that stood out. Realtor.com also flagged that March 2025 saw the biggest year-over-year jump in new listings, brand new homes hitting the market in 3 years.
Really?
Yeah, up 10.2%. That definitely signals, more sellers deciding, okay, now's the time, more seller activity.
So what does all this inventory news mean for you, the listener, trying to figure out this market?
Fundamentally, more homes on the market means more choices for you as a buyer. Simple as that.
Right.
But maybe more importantly, it signals that shift in negotiating power we talked about. When there's more to choose from, buyers usually get a bit more leverage. You might have more time, feel less pressure, maybe less likely to get into those crazy bidding wars we saw not too long ago.
Yeah, that feels like a significant change. Okay, indicator 2. Days on market, Dom. How long are homes taking to sell nationally?
Yeah, the data backs up what you might expect. Homes are taking longer to sell than last year. Realtor.com's March numbers show a median of 53 days on market.
53 days.
Which is 3 days longer than March 2024.
3 days? Doesn't sound like a massive leap. Is that consistent elsewhere?
It is, generally. Zillow, in February, they measured days to pending, which is a bit different, but they had it at 33 days.
Okay.
And Redfin, also in February, said a typical home sold in 54 days. That was 6 days longer than the year before.
6 days is more noticeable.
Yeah, and Redfin actually pointed out it was the slowest February for selling since way back in 2020.
Okay, so slower across the board. Now, the key question again, the speed of this change. Is the time to sell getting longer faster now?
This is where it gets interesting. Nationally, the month-over-month increase in DOM seems pretty stable, actually.
Suitable?
Yeah, I mean, homes are taking longer year over year, but the rate of that slowdown doesn't seem to have suddenly accelerated in the last month or so. Like Realtor.com's early March data pointed to homes taking 4 days longer. And by the end of the month, the full month figure was 3 days longer, so pretty close. It suggests more of a consistent, gradual slowing trend rather than a sharp, recent acceleration in how long homes are sitting.
So slower overall, but the pace of that slowing isn't necessarily picking up dramatically right now. What's the takeaway for the listener on this one?
Well, for you, it could mean a little less pressure, right? Less need to make a snap decision if you find a place you like.
Right, more breathing room.
Exactly. More time for inspections, thinking things through. But it also kind of hints that maybe buyer regency is easing off a bit overall.
Which could be tied to affordability, the economy, lots of factors.
Could be, yeah. Fewer buyers feeling they have to jump immediately.
Okay, let's hit our third national indicator. Price reductions. Are more sellers lowering their prices?
Yes. And this is a really, really crucial one to watch. The data is clear. The share of listings with price cuts is definitely elevated compared to recent years.
Elevated how?
And still rising. Realtor.com said in March 2025, 17.5% of active listings had a price cut.
17.5%.
That's the highest percentage for any March, going back to at least 2016. And importantly, it was up from 16.8% just in February.
Okay, that bump from Feb to March seems noteworthy.
It is. It's a decent increase in just 1 month.
What about other sources on price cuts?
Well, looking a bit earlier, January data also showed this trend. Altos Research said roughly a third, about 33% of listings had cuts back in January.
A third?
And Zillow's January number was nearly 23% with cuts, which they said was the highest for January since 2018.
So definitely a consistent story here across different sources and months. More sellers are cutting prices. And the pace. That increase from 16.8% to 17.5% in March, does that suggest acceleration?
It shows a continued, modest maybe, but definite increase in seller concessions recently.
Okay.
It really suggests more sellers are realizing their initial price might be a bit optimistic, out of sync with what buyers can or will pay right now.
So for you, the listener, why is this price reduction trend so important? What's the real significance?
This is such a key signal for you. When you see more sellers cutting prices, it's a strong sign they're adjusting expectations downwards.
Right. Reality check time for sellers.
Exactly. And that can create real opportunities for buyers. You might suddenly see homes fall into your price range.
Or have more room to negotiate.
Absolutely. Sellers might be more motivated to make a deal. It's probably the most tangible sign of leverage shifting towards the buyer.
Okay, so the national picture is definitely showing softening more inventory, longer market times, more price cuts. But we know real estate is local.
Hyper-local, yeah.
So what happens when we slice this data by region or even specific cities?
Yeah, those national averages really do hide some massive differences. We are seeing a major divergence across the U.S. It's not one market at all.
Okay, let's start with the areas softening the most. Where are they concentrated?
Primarily, you're looking at the Sun Belt and parts of the West. Think Florida, Texas, Arizona, Colorado. These states are seeing really substantial growth in active listings.
More than just YOA growth.
Yeah, in many cities within these states, inventory is actually higher now than it was before the pandemic started in 2019.
Whoa, back above pre-pandemic levels.
Right, and significantly, Florida and Texas. They lead the pack with the most major metro areas, 20 in Florida, 9 in Texas out of 42 totals studied that are already showing year-over-year declines in median sale prices.
Ah, so price drops correlating with that high inventory.
Very strong correlation, yeah. Often happens where inventory shoots past those pre-pandemic norms.
Any specific cities jumping out with big inventory growth?
Well, look at Washington, D.C., for example. Saw a really noticeable acceleration in inventory growth, up over 56% year over year in early March.
Okay.
Nevada saw a 57% YoY increase. Colorado, around 48.5%. Huge jumps.
Right.
So if you're house hunting in those kinds of areas, you're likely facing a very different market dynamic. More choice, maybe more negotiation room. Did a ball game, really.
Definitely sounds like it. Okay, what about the flip side? Where are markets staying tight?
That's largely the Northeast and parts of the Midwest. These areas are still dealing with inventory constraints.
Meaning still well below pre-pandemic levels.
Way below, like Connecticut. Still down almost 77% on inventory compared to 2019.
Wow.
New Jersey's down 67%, Illinois down 65%. So if you're looking to buy there, you're probably still facing a much more competitive scene, fewer options.
A really stark contrast. Okay, let's bring time on market back in regionally. How does that look?
Well, as you'd guess, the markets with that rapidly rising inventory, they're generally where DOM is stretching out the most.
Makes sense. More supply, maybe softer demand.
Exactly. Leads to homes sitting longer. But it's important to remember, faster selling markets do still exist.
Where?
Particularly in those tight inventory spots we just mentioned, Northeast, Midwest, and also in some of the pricier coastal metros. Think San Jose, Seattle, Boston. Even with a slowdown elsewhere, these places can still see pretty quick sales.
So pockets of speed remain even in a slowing environment. Now, price reductions regionally. Where are sellers cutting the most?
No surprises here. It follows the inventory and DOM trends. Price cuts are most common in those high inventory, longer DOM markets.
Yeah, where specifically?
We're seeing a lot in Florida, Tampa, Jacksonville, Orlando come up often. Texas, too, especially Dallas and Austin.
Right.
Out west, Phoenix and Denver. And places like Charlotte, Tucson, also showing high rates of price cuts.
So mainly south and west again.
Yeah, those regions saw the biggest year-over-year increases in price reductions back in February. Conversely, the Northeast and Midwest, generally lower shares of price cuts, matching their tighter conditions.
Okay, so Sunbelt and parts of the West definitely feeling the most downward price pressure, judging by those cuts. Now let's talk about actual closed sale prices. The lagging indicator, but the proof in the pudding, right? What are the trends over the last couple of months telling us?
Right, so nationally, most big price indexes are still technically showing modest year-over-year gains.
Still going up compared to last year.
On average, nationally, yes. But this is critical. The pace of that appreciation has slowed way down from the peaks we saw. Some analysts are even saying monthly price changes are basically flattening out nationally, which suggests, we could see further slowing ahead.
But you mentioned earlier we're actually seeing outright price declines in some places.
Yes, and this is probably the most direct signal for you, the listener, that things are weakening. Reza Club, they track this closely, identified 42 major metro areas showing year-over-year price declines as of February.
42 metros down year over year.
Yep, and that number was up from 31 the previous month. So the geographic spread of these price drops is widening.
And where are they concentrated? Still Florida and Texas?
Heavily. Florida had 20 of those 42 metros. Texas had 9. We're also seeing some YoY drops pop up in Louisiana, Arizona, Colorado, too.
Can you give us some concrete examples? Which cities are actually seeing prices lower than last year?
Sure. Some prominent ones include Austin, down 3.8% YoY, Tampa, down 3.6%, San Antonio, down 2.0%,
Okay.
New Orleans, down 1.7%, Phoenix, down 1.6%, Jacksonville, 1.5%, Dallas and Orlando both down about 1.4%.
These aren't huge drops, but they're definitely not gains.
Exactly. It's not just slower appreciation. It's actual negative territory compared to last year.
And is there a common link between these markets?
Yes, and it ties right back to what we said about inventory. These price declines are happening overwhelmingly in the same places where inventory shot up past pre-pandemic levels.
Got it.
It really suggests that increased supply is putting real downward pressure on prices in those specific spots. So yeah, in some parts of the country, prices are actually falling compared to a year ago.
This is super critical info. Okay, let's pull it all together. Let's tackle our main question head on. Based on these trends, especially over the last 30 days or so, is the market weakening accelerating?
Right, the core question. Let's weigh the evidence we've got.
Okay, what points towards, yes, it's accelerating?
Well, first, that share of price reductions hit multi-year highs for March, and it increased from February. That suggests sellers are feeling more pressure now.
Okay, point one.
Second, the number of cities with actual year-over-year price declines grew from January to February. That suggests the weakness is spreading geographically.
Point two.
And third, year-over-year inventory growth stayed really high nationally, even ticked up slightly from Feb to March. Plus, that big jump in new listings in March shows supply keeps pouring in.
Okay, that definitely sounds like a weakening market, maybe picking up steam in some ways. But what's the evidence against saying it's uniformly accelerating everywhere?
Well, for one, while days on market are up year over year, the rate of that increase seemed to stabilize nationally in the last month or two. It didn't show a sharp acceleration upwards.
Okay.
Also, we just can't ignore those huge regional differences. Lots of markets, especially Northeast and Midwest, just aren't showing these signs of accelerated weakening. They're still tight.
Right, the divergence.
And finally, while inventory is growing month over month nationally, it wasn't like a crazy off-the-chart spike compared to normal seasonal buildups.
Okay, so bringing it all together, what's the verdict on the 30-day acceleration question?
I think the fairest assessment is, yes, the market is weakening in many places. And yes, there are signs pointing to a potential mild acceleration of that weakening.
Driven by what, mainly?
Mostly driven by those increasing price cuts and the widening geographic scope of actual price declines in high inventory areas.
Okay.
But this is absolutely not a uniform trend across the whole country. It's very patchy.
Got it. A nuanced picture. Some signs of acceleration, especially where inventory is high, but not everywhere. Now, you mentioned a second research report diving even deeper, maybe looking at weekly data for March.
That's right. This second source gets really granular, looking week by week through March 2025. It's maybe a bit more technical, but it gives some extra insight into the very latest momentum for listeners really wanting to track shifts closely.
Okay, what were the key national weekly trends this report found for March?
Looking week by week, active inventory's year-over-year growth rate actually sped up through March.
It did.
Yeah. Week ending March 8th, inventory was up 27.8% YoY. By the last week, ending March 29th, that YoY growth was up to 32.3%.
So the gap was widening faster as the month went on.
Exactly. The speed of inventory growth relative to last year was increasing.
Okay, that matches the first report's hint about acceleration there. What about DOM week by week?
Now, this is interesting. While homes were taking longer to sell each week compared to the same week last year,
Okay.
the amount longer actually shrank as March progressed.
Shrank. How so?
Week ending March 8th, homes were taking 4 days longer YoY. By the week ending March 29th, they're only taking 2 days longer YoY.
Huh. So the slowdown itself was slowing down.
Kind of, yeah. The market time slowdown was decelerating slightly by the end of March, nationally speaking.
That's a bit counterintuitive. Okay, what about price cuts on a weekly basis?
There, we saw a pretty consistent YoY increase in the share of price cuts all through March.
Okay.
For the first 3 weeks, the increase compared to last year held steady around 0.8 percentage points higher. But then, that final week, ending March 29th, it jumped up to 1.1 percentage points higher than the same week last year.
So a little kick upwards at the very end of the month.
Potentially, yeah. Suggests maybe an acceleration of price cutting right as March closed out.
So, summing up the national weekly view, inventory growth accelerating, the rate of market time slowing was actually decelerating, and price cuts potentially accelerating late in the month.
That's a good summary.
Yeah.
It's definitely a more complex picture of momentum when you slice it that thinly. Now let's see what this second report said regionally.
Right. What about California?
Well, at the state level, Redfin's February data showed that big 24.1% YoY inventory jump. That kind of sets the stage for potential softening in March, fitting with the national acceleration we saw.
Okay. And specific CA metros, like the Inland Empire.
Yeah, unfortunately, the specific weekly numbers for March for the Inland Empire weren't in the bits we saw from this report. You'd really need that week-by-week tracking of inventory, DOM, and cuts there to see the acceleration.
Right. How about Orange County? You said there was more detail there.
Yes, Orange County gave us a weekly snapshot. Inventory showed steady week-over-week increases through March. More homes coming online. But average days on market were remarkably stable in the second half of March. Didn't really budge much week to week.
Okay, so inventory up, but homes not sitting longer.
Seems like it, in OC specifically. And weekly closed prices. Looking back over maybe 60 days, they bounced around a bit, some volatility, but no clear, steady, downward trend emerged in that recent period.
Huh. So Orange County is kind of its own story then. More homes, but not necessarily slower sales or falling prices recently.
Exactly. Really highlights how local things are. Okay, Let's quickly revisit the Southeast Florida and Texas, where the monthly data showed more softening.
What did the second report add there?
It just reinforces that inventory has really bounced back in those areas. We saw March monthly data for Houston, for instance. Inventory up 36.4% YOY, DOM up YOY, and months of supply hitting a 12-year high.
Confirms the softening trend.
Definitely confirms the softening. But again, to know if the pace accelerated within March, you'd need that weekly data for specific Florida and Texas cities, which wasn't detailed here.
Understood. And the Midwest Northeast, the tighter markets.
Yeah, the second source mentioned some Midwest markets actually saw strong price growth in February. Yeah, which really contrasts with the potential softening elsewhere. Just drives home that point.
Yeah.
The U.S. housing market is not one single story. What's happening in Florida might be totally different from Ohio or Massachusetts.
So, synthesizing the second, more granular report, what's the main takeaway on accelerating weakness?
The key takeaway is, yes, the market's softer year over year, but the evidence for a uniformly accelerating rate of weakening across all indicators during March. It's mixed.
Mixed how?
Inventory growth did accelerate nationally week by week, but the DOM slowdown actually decelerated, and price cuts may be accelerated late in the month. And underneath it all, those regional variations are absolutely crucial.
So it really hammers home that need for listeners to focus locally.
Absolutely. Forget the national headlines sometimes. Look at your street, your neighborhood, your city. That's where the real story is for you.
Okay, let's wrap up this deep dive. Summarize the key takeaways for everyone listening. What should they keep top of mind?
Okay, first, year over year. The market in many places is weaker. Definitely more homes for sale, generally taking longer to sell, and more sellers cutting prices. That's clear.
But the big question is, it's speeding up right now. That's fuzzier.
Much fuzzier. The evidence for a broad, uniform acceleration in the last 30 days just isn't consistent across the whole country or even across all the indicators.
Right. Inventory growth seemed to accelerate the most clearly.
Nationally, yes. But then, weirdly, the rate homes were taking longer to sell actually slowed a bit in March nationally.
And price cuts.
Definitely more sellers cutting prices, and maybe a bit of an uptick in that trend right at the end of March.
And regionally, it's night and day in some places.
Totally. Specific areas, especially in the Sun Belt, show much stronger signs of softening and potential acceleration. But then you look at the Northeast, much of the Midwest, they seem way more resilient. Less sign of rapid weakening.
So a really complex picture. What's the single most important final thought for our listener today?
It's this. While the headlines might shout about a cooling market, the reality on the ground is way more nuanced and really depends on where you are. So for you, the absolute key is to zoom in. Look closely at your specific local market. Try to figure out which of these trends, rising inventory, more price cuts are strongest where you live, or is your market staying pretty stable? That local picture is going to tell you way more than any national average ever could.
Excellent. Really practical advice. And if people want to keep digging into this.
Yeah, I mean, we've really only scratched the surface here, haven't we?
Sure.
So what are you seeing in your local market? What questions did this bring up for you? Would really encourage you to dive into your local data sources. Keep an eye on these leading indicators right there in your community. That's where the insights are.
Great stuff. Thanks for joining us for this deep dive.